Hi all. Welcome to Plant-Based Portfolio, where we explore all things related to investing and trading plant-based stocks. We help you put your money where your mouth is and invest healthily in companies that align with your values. In this video we will do a deep dive into Oatly and examine the strong promise this amazing plant-based company holds in a growing plant-based food industry. After this video you should have a strong understanding of the value Oatly can offer its shareholders. Before we dive in, feel free to smash that like button to let YouTube know that you value this content, and subscribe and click the notification bell to make sure you catch the latest videos. Awesomeness. Let's get started. To start off, let's get an understanding of the origin of Oatly. Oatly is based in Malmö, the third largest city in Sweden. Malmö houses just under 750,000 people and has been the home of Oatly since its founding in 1994. Interestingly, the founding of Oatly coincides with a shift in Sweden agricultural policy away from price controls in 1990, which resulted in much lower food prices. These lower food prices in turn may have been the catalyst for Rickard and Bjorn to found Oatly as a vegan dairy alternative company. Today, Oatly has grown massively, but the ride has had a lot of chops since its IPO. Oatly is down nearly 21% year to date, hovering around $16 per share as of the 27th of September, 2021. That is about 8% off the all-time low of $14.87. The good news is that the stock price appears to be beginning to consolidate since mid-August, despite Oatly specifically, and the plant-based industry as a whole, taking a bit of a hit over the last few months. There are a few key reasons why we think Oatly demonstrates strong promise in the near future. Now let's examine Oatly's product market fit. Oatly consistently leads oat milk taste tests, and by consistently, we mean every single year. An oat milk taste test was published in 2019 in Repeller. 6 popular oat milk brands, Happy Planet, Califia Farms, Silk, Minor Figures, Oatly, and Pacific, were featured. On a somewhat confusing scale, Oatly outscored its competition by at least 2 points. The author summed up the competition by writing, "I was very willing to cede my oat milk loyalties to another brand besides Oatly as a result of this experiment, but I cannot lie, it's still my favorite." In 2020, Epicurious performed a taste test of 11 popular oat milks and designated Oatly as the best oat milk. Testers praised its well-rounded flavor and delicate, milky sweetness, deeming it delicious and the most oaty of the bunch. They also noted that the consistency was very close to dairy milk. "We think this is particularly important as non-vegans will be the majority of customers responsible for Oatly's increasing market share, and will be put off by anything that deviates too much from dairy milk." Just a week ago in September 2021, BuzzFeed published their own oat milk taste test. They compared Oatly, Chobani, Plant, and Califia Farms. Again, Oatly dominated with the #1 spot. Additionally, the author and taste tester noted that she preferred Oatly and Chobani to the rest. So what does this mean? We interpret this to indicate that Oatly has strong and growing product market fit. By comparison, Beyond Meat, which has decent product market fit, is not the hands-down favorite in the plant-based meat sector. Some people love Beyond Meat burgers, but others love Impossible Burgers. At a fundamental level, people love Oatly and consistently choose it as best among its peers. More than that, they evangelize the product, the prime indicator of product market fit. Strong growth companies rely upon finding product market fit, then scaling as fast as possible to dominate their market. On the quantitative side, Oatly is actually the largest plant-based company to our knowledge, with a market capitalization of around $9.5 billion and an enterprise value of about $12.3 billion. Oatly dwarfs Beyond Meat, Tattooed Chef, and Laird Superfood combined. Why is this important? While micro-capitalization and small capitalization companies theoretically have more room to grow in terms of market capitalization appreciation, mid-capitalization and large capitalization companies tend to have more stability. This is likely due to market capitalization often being used as ownership criteria for long-term institutional shareholders. Indeed, institutions, including venture capital and private equity firms, own 27% of all Oatly shares while insiders own 8%. For a deeper exploration of Oatly's shareholders, be sure to check out our top 10 Oatly shareholders video. Along with relative market stability, Oatly is rated very favorably as a buy by analyst consensus. While we always do our own analysis and don't rely upon analysts to tell us when or which companies to buy, it is reassuring to have analyst consensus aligning with ours on a high conviction plant-based portfolio company. This type of sanity check is always good practice. RBC analyst Nick Modi offered this take on Oatly on the 19th of August, 2021. In our view, the fundamental story and brand positioning of Oatly is unchanged, as is our thesis that the brand will continue growing nicely while maintaining premium positioning. While we expect it will take a few more quarters of executing the capacity rollout for the stock to catch up to its fundamental prospects, we believe the current risk to reward of the shares is too attractive to ignore. One of the biggest recent announcements for Oatly was its partnership with KFC China, part of the publicly traded Yum China, ticker symbol YUMC. Just to recap, this partnership launches 3 Oatly oat frozen dessert varieties sold as strawberry, chocolate, and coffee vegan ice cream. This is a huge deal. KFC is reportedly the largest fast food chain restaurant in China, which is in Oatly's fastest growing region as mentioned in our Oatly Q2 2021 earnings report review. Additionally, if Oatly's vegan ice cream is successful at KFC, it is very likely that Yum China will expand offerings to their other popular portfolio companies in China including Pizza Hut, Taco Bell, East Dawning, Little Sheep, Wang Ji Wang, and Coffee I Enjoy. This is an incredibly smart strategy by Oatly to leverage both widespread vegan food adoption and China's exponential growth. Their strategy also falls in line with our previously mentioned thesis that new customers try products in restaurants, fall in love with the brands, and then purchase them from retailers for consumption at home. Final thoughts. Though Oatly is an unprofitable growth company, there are many positive attributes that increase conviction in owning this stock. First, consumers love and evangelize the product, which portends strong product market fit. Second, Oatly has strong fundamentals and is supported by analyst buyer consensus. Last, Oatly's vegan ice cream rollout in China is a key strategic move and we eagerly watch in anticipation of China becoming a hugely successful market for Oatly. Many thanks for watching. Feel free to subscribe if you gain value from this video. Please comment below and also let us know what other kind of content you would like to see. Thank you again and please check out some more plant-based portfolio videos right now.